Hello and welcome to Business Today Television. I am Siddharth Zarabi and you're watching this special Easynomics episode in our continuing post-budget coverage of Modinomics 3.0, the first budget of Prime Minister Narendra Modi's third term. One of the significant things in the budget is the changes to capital gains taxation across asset classes, the removal of indexation, the increase in STT for F&O, and the broader question that is still up in the air, what is happening to household savings? Because Indian banks have for some time now been talking about a declining deposit growth and the shift that is happening of savings into direct market exposure or indirectly through mutual funds. To try and make sense of this, I am joined by a power-packed panel. My colleague Anand Adhikari, the managing editor of Business Today magazine, has written an article about the truth of declining household savings and the link, if at all there is one, with F&O trading. We'll go to him to understand what he has found out and what is the summary observation. We also have two very well-known guests with us today, Dr. Manoranjan Sharma, Chief Economist at Infomerics Ratings. We also have Murthy Nagarajan. He is the head of fixed income at Tata Asset Management. So what we are going to do on the show, Anand, because we want to make it simple for a wider audience and not restrict this just to banking viewers, I want you to explain what is your summary conclusion. Are household savings shifting into far more riskier F&O kind of investing and market investing? What have you found out?
Thank you, Siddharth. Just to give a perspective to our viewers, in the last 2 months we have seen various statements, from the government and the exchanges and the securities regulator, talking about the risk in the F&O segment. So, for the reference of our viewers, Nirmala Sitharaman said that she is very, she was very cautious in her statement, and she said, I'll just quote, that F&O could create, future challenges, not just for the market, but for investor sentiment and also for the household finances. But she talked about a possibility here. I was reading about the finance, secretary's, quote, and he expressed concern on the unusually high ratio of F&O trading to cash market, and even if one compared with the global market, that is justifiable because turnovers are really very high, but it also includes the notional turnover. I was reading about the RBI governor's statement where he said the total turnover F&O is much bigger perhaps than the nominal GDP of the country. I looked at the Dinesh Khara's statement. He said, and he made a very general statement, and he said that money should lead to capital creation and not froth. Okay, and again it was a very general statement. NSE CEO Ashish Kumar Chauhan, he talked about the small investors' lack of capacity to manage high risk in F&O. I was a bit surprised when I saw the statement from the SEBI chairman. She said, and I quote, household savings rather than going into capital formation are being diverted for speculative bets through F&O. She is a former banker and I trust her, but I was a bit surprised. No other official, Siddharth, has linked the speculation on the F&O side to household saving. Now we'll discuss that, but if you look at a larger, let's say a 10-20 year data, there has been a secular decline in the domestic saving rate, and I have some data. The rate was as high as 37.8% of GDP in 2007-8, and now it has gone down to 30%. And one of the big components, Siddharth, of domestic saving is the household saving. The savings from the corporate and the public sector constitute around 40%, but right. Major chunk, 60% of the saving comes from the household side, and within that you have the physical part, physical assets, that has gone up. and you have financial asset, that's where the equity and the mutual fund everything comes in, but the bigger
Yes.
chunk is the fixed deposit part there. Okay,
Right.
and third is the gold and silver. Okay, so maybe we can discuss with our experts, but that's the way I saw
Sure.
it. And I don't.
That's a good overview of this, and I'll go to Dr. Sharma first. Dr. Sharma, as Anand has written and was explaining, some of these remarks and what it seems to now be clear that the main argument that is being made against F&O trading is that household savings are being diverted from productive capital formation to speculative bets. Is this what is really happening? What is your view on this point?
Well, this we have been flagging this issue of some kind of a mismatch between credits and deposits. As most of us have been tracking the banking sector for quite some time, you'd be aware that pushing credits has been usually more difficult than stepping up deposit mobilization. However, for last 12 months, 14 months, for quite some time, we have seen that the credit growth has fast outpaced the growth in deposit mobilization. I think I wrote an article 1st January for Economic Times, some other newspapers, and also. So we have been flagging this issue, highlighting this issue at least for last 6 months, if not more. Now this issue has acquired a sharper focus because I think about 10 days back, the RBI governor also made a misstatement that credit growth is considerably at a faster rate, at a higher rate than the growth in deposit mobilization, which could lead to some kind of a mismatch between assets and liability. Now, as far as the FNU segment is concerned, there is some merit to this argument. But to place this in a proper perspective, we have also to realize that through the SIP routes, mutual funds are infusing something of the order of 25,000 crore on an average for the last 20 months or so. And in the last month which has just gone by, they infused about 40,000 crore. So even if you take a conservative figure of about 25,000, extrapolating it over a 12-month period would work out to 3 lakh crore, which is a huge, humongous sum. So obviously, this is also an important factor. The money flowing in the stock market has been moving from one high to another. All of us are aware it went to 70,000, 75,000. Now, that despite the concerns on government formation, the impact of political alliance
Right.
partner, it is 80,000 level. So this also needs to be kept in mind.
Right. Murthy Nagarajan, I'm coming to you. Where do you stand on this matter? Because F&O seems to be the new whipping boy in town. Is that justified, or I put this question to some people that if the banks are struggling for deposits, maybe they should be doing something more to incentivize deposits.
So thanks, Siddharth. So let me put my perspective. So what is happening is that for deposit creation, you have to create reserve money. Basically, what has happened is that last 2 years, 3 years, RBI has been following withdrawal of accommodation. So what he's saying is that he will keep the uh, system liquidity in negative zone. If you are creating a system where RBI is the guy who's going to provide liquidity to system, and he's saying that I am going to keep system negative, obviously the deposits will not grow. It's a basic thing. Like you have to create deposit means RBI has to pump money. So RBI has been withdrawing the liquidity from the system, right? So if you are withdrawing liquidity in the system, deposits are not going to be created. And the second point is that as far as lending is concerned, yeah, so there has been some merit where people have been saying that a lot of money of the banks, like if you look at many of the listed banks also, what they were getting this high valuations because they were doing unsecured lending. Okay. So if you look at some of these private sector banks, 40% of the deposit is going towards unsecured lending. So which maybe that some of the money is flowing into the market. Obviously, if you're going to charge somebody higher rate in the unsecured side, and then he has to make that type of money by trading in F&O, right? So that is the reason why you can say that okay, people are losing money in F&O, and because the point is that they are trying to generate around 20-25% return there. So that means they are taking risky bets there, right, to generate the returns to take care of the unsecured borrowing which they are doing. So there is some merit to that. But coming back to the fundamental question that like what is happening is that many of these banks are not able to raise deposit because the liquidity in the system has been negative for long periods of time. And that is the reason why we are seeing that if you talk with bankers also, they say the same thing. Once liquidity becomes surplus, like what is happening now, over a period of time, you will see the deposit growth will also increase.
Absolutely. Anand, uh, is this shift that we are seeing in falling CASA, uh, is this a structural shift or this is transitory post COVID where fundamentally there were changes after a shock, both a supply side shock and a asset valuation shock, that a transitory shift has happened in terms of how people are approaching the returns that they seek on their investments?
So, Siddharth, two or three points there. We have now a new, differentiated banks, called, small finance bank. And these are the banks, which are new and they are offering much higher rate. So, a part of the, though, I mean, the scale is not big, a part of the deposits are also, shifting, to new private sector bank. Now, you look at the CASA ratio of, like, say, IDFC Bank. In the just last 3-4 years, they have now a CASA of almost over 50%.
Yes.
And there are 7-8 a mid size kind, if you look the size of AU Bank, it's much bigger than the mid size banks. So many, if we see the CASA of the top 5 banks, I agree there has been a decline there. But if you see the CASA of many other banks, it is on the rise. So that's the number one point. Number two, yes, I agree there is a structural shift. A part of the money is shifting. Now, if you look at the monthly SIPs which the mutual funds are getting, it's more than 10-15,000 crore every month. So I agree a part of the savings of people are also shifting to mutual funds. But
Okay.
overall, if you see the last 2-3 years, the data which I have of outstanding deposits have been growing at 8 to 10%. But the size of the deposit is also bigger than the size of the credit. So growth is around 8 to 10%. Year on year. If you look at the outstanding deposit, of the bank.
Dr. Sharma, what challenge does this mean for our banking system on a medium term basis? If this is now to stay, where younger people are finding it easy to use mobile phone apps and invest at the click of a button, either in daily trading or do SIPs through mutual funds, the whole process has become much easier and therefore volume is also going up. So what do banks need to do, particularly from the point of view where Anand is drawing this comparison between small banks and how they are doing much better than some of our legacy much bigger banks?
Well, that's an interesting question, but I think apart from seeing it mainly as a bank specific issue, I think there is pressure on CASA deposits of banks across the spectrum of banks in the public sector domain, also in the private sector domain. Every bank is saying there are obviously some technology related challenges also, which make it faster for a customer to switch funds like sweep in, sweep out deposits. A customer can give standing instructions that beyond a certain amount, certain threshold amount of, let's say, 20,000 or 50,000, amount shift somewhere either to term deposits or some other account. So these are systemic challenges. All banks have to come together, maybe some aggressive deposit mobilization campaign, some kind of a sensitization of customers, wide range of benefits. The benefits which accrue to the customer from the banking system, particularly deposit customers, need not be seen just in terms of returns. There are wide range of other facilities which become available to the customer. Maybe there's a need for banks,
Sharma, tell us, Dr.
all
Sharma,
banks,
please,
IB.
Dr. Sharma, do educate our viewers as to what those extra benefits that you seem to be alluding to are. Because the reason I ask you this question is, I have spoken to young people who are just now gotten into first jobs in the last couple of years, college pass outs. No one talks about fixed deposits. They find fixed deposits boring. They don't like the lock-in, and of course the rate of interest, I'm not even talking about that. They are happy taking risk. There is a different culture at play. So when you say that bank deposits provide something more, what is that more?
Okay, let me explain. Let me pick up some benefits which most people would be aware. You have some CASA deposits, so they are very liquid. Liquid, by liquid I mean, let's say if you have a term deposits of 10 lakh rupees, sometimes for medical emergency or some wedding in the family or some such thing, you need quick funds. You can take a loan against those deposits, and the whole transaction can be done seamlessly in a matter of minutes. Let's say now India is in a high growth path. We are looking outwards extra. So if you wish to do some kind of higher studies, let's say in US, UK, or some part of Europe, they would ask for a statement from your banker saying that you had kept a minimum deposits of let's say 20,000 rupees. So these are some other benefits. In case
Okay.
of obviously current accounts, obviously there are large number of other facilities. You can withdraw deposits any number of times. And in case of remittances, there with NEFT and
Okay.
RTGS coming into play,
Murthy
funds can be
Nagarajan,
with.
Murthy Nagarajan, do you agree with this contention that Dr. Sharma is making? Because I really, from whatever limited examples I can quote, I really feel that the younger generation, just as it does not opt for certain kinds of traditional media, this is a younger generation that lives in social media, that is digital first. Many of them have never picked up a newspaper and will not ever have that ink on their hands. They are happy consuming news from their handsets. Is this therefore also to do with a complete shift in how a certain section of our savers is approaching banks versus market linked investment?
Yeah, so let me make 2 points here. Let's say if you're putting money, like people are talking that money is going to mutual funds, right? So even if you're going to mutual funds, so you're giving, it is going to the banking channel only. You're putting money in mutual funds, we have got banks from where we are collecting the money. If you are buying also, we are buying and the money is again going back to the banking system. So the banking system money remains stable only. It is not that money is going out from the banking system. Okay. So money is there in the banking system. Only the medium has changed. Maybe it has become current account is more instead of FDs. People are putting in current account because they have to buy sell the securities, or they are shifting from their CASA to the mutual fund side. The money is not going out from the bank system. The most important point which you have to note is that lot of money, currency in circulation. If you look at the RBI bulletins, what is happening is that lot of money is going out from the system. So lot of cash is going out from the banking channel, banking system itself. So what is now happening is that we have got lot of money which has gone out from the banking system. Currency in circulation has increased. That is because a lot of people have been buying houses and all, where you have to pay some amount in cash. So that is the reason why some of the money seems to be going out. Or for other expenditures where they're using cash, they are using physical cash instead of the banking channel. So that is where I think is the problem why the money is not the bank system. Money, if it is there in the bank system, it can be in CASA, it can be in your savings account, right? The mutual fund money is sitting in the current account of the mutual fund. So that is a CASA deposit with the bank actually. Money is
Absolutely.
not leaving. Yeah.
Absolutely. The money is not leaving, but you make this very, very
Siddharth, Siddharth,
interesting. Yeah, go ahead, Anand. Go ahead.
Yeah.
Siddharth, just to make 2 points on the deposit side. Now, one, it's very challenging for the large legacy bank to hike the interest rate. Now tomorrow, because they have a large book, okay, deposit book. Now if they increase the interest rate, to attract more, let's say low cost, savings or the current account, now that will impact their NIMs, okay, because on the asset side, there is a cutthroat competition out there. Now if they will impact their NIMs, their stock market valuation get impacted. So there is a cascading impact, if they try to, increase the rate and lure, more deposit, number one. Number two, on the innovation part, on the deposit side, some of the banks have come out with really very good innovation, like, one private sector bank, gives you a monthly interest which you earn. Generally what happens, bank tells you after a year, or let's say, 6 monthly, but here is a bank, it transparently tells you every month how much you have earned on your, savings account. Number two, I have also seen, some banks offering, some kind of a sweep-in facility where your savings bank's money, gets converted into a FD kind of a thing, and you can also break it, anytime. There are no charges there. So we also need, Siddharth, a lot of innovation, on the deposit side from the banking industry.
Absolutely. Anand, I want you to come in on another aspect, which a very important point that Murthy has just made. This is the return of cash in the system, and I want to link it to the changes around indexation, particularly for real estate. Some of the observations that we have been hearing, and these are muted, but there is a fear that cash may come back into a certain kind of property deal for ensuring that the tax liability after the changes does not go up. Is that what you are also picking up from your sources? Because I want to take this question to our experts subsequently.
See, cash as a percentage of GDP, Siddharth, if we, let's say, if we see, the pre-demon and the post-demon, I guess the cash as a percentage of GDP was, more than 12%, and it fell because of demon, and we are back at, around the same level. The cash has not gone out, and the level of cash, is still very high today. People still prefer, though people talk about this digital and all that, but if you go out and if you see all the parameters, the cash as a percentage of GDP is still very high in the system, and we have, whether it's real estate, MSME, even the digital part, like if you see, let's say, MSME, many SME, they receive cash, their receipts are in cash, and they also pay in cash. And we talk about MSME, then there are lakhs and lakhs of MSMEs, so cash is still there in the system.
Dr. Sharma, what's your view on this topic that has been brought forth by Murthy? Do you kind of agree with this contention that he has
on this indexation issue?
Absolutely.
Well, there are 2 points of view. The FM and the Finance Secretary have been at pains to point out that net, it's by and large neutral. One is that the benefit of indexation has been removed from the existing taxpayers. But then the rate of taxes has also come down steeply from 20% to 12.5%. So possibly it may not be proper to say that one size fits all. By and large, it will depend. But we are basically here, to my mind, 2 factors which we have to take in mind. One is the rate of inflation, and the other is the kind of capital appreciation. So, on the basis of, by and large, these 2 things, but this is still something like a work in progress. So, going forward, there are diverse views. Let us see how this thing pans out. Maybe it's too early to take a strong and firm stand on the issues, but the kind of wisdom which is coming out may be that this is not all that bad as was made out in the immediate aftermath of the presentation of the union budget.
Okay. Murthy, I come back to you and I want to pose a different question to you. Given the kind of debate that we had in the run up to this budget around capital gains and F&O and the actions that we have seen, can we say that the changes are also aimed at perhaps curbing excessive speculation, preventing a bubble from being formed, and is it also evidence that this government is ready and always willing to take tough decisions even if they prove to be unpopular to many people?
So, so how? Let me see. Like what my reading of the budget is that okay, they have been doing certain things right. What it seems is that there seems to be some uh, rethink from the in the finance ministry that a lot of these retail investors are getting hurt. So they have put up a paper saying that 70% of the people who are retail investors who are participating in F&O have lost money. Seeing that last 3 years we have seen the stock market double or triple. So these are all gullible investors who are actually, like I was saying, now if you are going to take money from the borrow at 20%, you require 25%, 30% return. That is not possible in a short, and that too in a short period of time. So it is difficult for them to generate that type of money. So obviously there is speculative activity which people are doing, quick money to be made. So that I think will be a small proportion of the population is doing that. But futures and option has been a very good market for price discovery because on the based on futures and option market you are getting the cash price being discovered. So yeah, to some extent I would say it is a I would not completely agree with this. Basic problem what they have to solve is that they have to banks have to increase their deposits. I think banks have to give them because now what has happened is that investors are also become they are also looking at what type of returns. It is an young country, right? If in a young country you are looking to build up wealth, and wealth can be built up only through two three means. Either you invest in equity markets or you take some property also. Property has got its own disadvantage of all the costs. It's better to them invest to equity. And right now we are only 4% of people are investing in equity market, and that this thing will continue for more period of time. So it's I don't think I got an easy answer to this, but what I can say is that what I can say is that you have to have you have to have banking system which is able to compete with this type of returns which have been given by this alternate product. So which till they get their answer right on that, you will see this type of complaints on the banking system that they are not able to get cash, and you are trying many things, right? You have been trying. You are saying that FNO Cup, you will get money into cash. Let's see how things. Previously, they said that money is flowing into mutual funds and debt mutual funds and in insurance, and then they did this, but still they are not got deposits, right? Now they are saying that
Absolutely.
because of I am not getting deposit. So now we are trying this also. We will go on trying all these things, but that is not going to. The major problem is that you have to get the money which is outside the system, the cash is outside the system to come into the system. For that, you have to give good rates. You also have to give good rates for the existing clients so that they stay back with you. So only by increasing the deposit rates, I think they will be able to compete with the get the money back into the bank system. I don't think by offering very low rate of interest and keeping the margin high, you are going to. It's a short term you can make show some profit, but over a longer period of time you have to increase the deposit rate substantially to and generate deposit in the system.
Absolutely.
May,
Yes, go
may,
ahead, Dr. Sir.
may, may I come in here? This is an important point. Let me share my perception. Uh, if the speculation is one of the ostensible objectives of curbing the speculation in the capital market and the stock exchange, then that's a very laudable and appreciable objective because uh, speculation, particularly in the F&O segment, futures and option segments, sometimes, most often, I would go to say, devastates investors, also has a debilitating impact on macroeconomic stability. There is a study which is available in the public domain of SEBI, which comprehensively points out that 90%, 89% to be precise, of the investors in the F&O segment They have done some kind of a time series analysis, looked at data, I think, for 3 years. It's easily available on SEBI site, have lost their money. So this 90% is a humongous figure, and I will advise investors to, as far as possible, stay away from the F&O segment. There obviously there's the attraction of making higher gain, but what the brokers, what the companies do not share, these kind of companies which encourage, lure
Right.
investors to that the possibility of making a much higher loss is also much higher. So
Absolutely.
speculation needs to be curbed.
Absolutely. And that's a
Siddharth,
very good point to.
Siddharth,
Yeah, go ahead, Anand. Final comment.
Siddharth, just final comment. Now, Siddharth, if you see the entire F&O issue, the problem is with the option side, and I have some data. If you look at the index option and stock option, it constitute around 30% of the total turnover. There is no issue with the 70% part. There is an issue with this 30%. Now, out of this 30, if you see, index option dominates like 28%. That's where the problem lies. Now, 80% of the people in terms of value who deal with index options are high-end, sophisticated people. It's only the 20% part because of the individuals or the retail. The number will be high. The value is only 20%. And the other thing we should understand, Siddharth, the F&O is for hedging and risk management. Even for an investor like you and me, we should be able to hedge. And tomorrow, and it's like the insurance which we take. And let's say if I pay 30,000 for insuring my car, and
Right.
nothing happens, no damages happens, is it a loss? It's not a loss, it's a protection. So
Right.
lot of people who are there in the F&O market are there for hedging, and tomorrow if you restrict the small investor, then it's like unequal treatment to one class of investor just because they are small. So tomorrow, whatever steps SEBI or the government is going to take, they should be careful about these things.
Absolutely, Anand, and you touched upon a very important point. I think it's clear to me, hearing all three of you, that as far as the rise of the equity cult is concerned, viewers, and Anand and I started reporting on India's markets quite some time ago in the mid-90s, and we know what the index was at, what individual stocks were at. We have seen many flavors of the season. We have seen lots of stocks come and go. But frankly, the rise of the equity cult of the retail investor, of an Atmanirbhar market in India, is a story that all of us are still understanding, reporting on, digesting, and it is perhaps very important for the regulators and the policy makers also to come to terms with the rise of the equity cult. Viewing the equity cult only from a point of view of suspicion may be wrong, but equally it has to be acknowledged that this government does not shy away from taking a call and taking a decision basis its beliefs and its understanding of many economic issues, and that also is one of the key underlying elements in the recent decisions. But the saga for our banks to do better on deposit mobilization will continue in the future, and as our experts on the show have pointed out, it's not just one factor that is responsible. There are multiple factors where even the RBI may have to take a call on this matter. Anand, Adhikari, Dr. Sharma and Murthy, thank you very much for your time with us today, and you the viewer for tuning in. We'll be back with more comment and analysis on important issues related to our economy. I'll see you again on another episode of Easynomics. Until then, goodbye.
IT space has slowly and gradually climbed up. Now 1.2% higher for the index itself. The IT is coming back in flavor. Kiranji, top IT stocks that you will continue to focus on today.
For the investment perspective, so definitely Wipro would be our preferred choice at current market price. If you look at the weekly chart price of the Wipro, it has given a breakout from very long-term falling trend line. Number one, on weekly chart also we are seeing that rounding bottom pattern is also getting breakout. Number three, on daily price chart, after the crash from 570, 580 level, the stock price is taking support of 50 days, 100 days moving average. Yesterday stock price has made a bullish angle pin candlesticks pattern, which is